joined Uber how many years ago?
2011.
You were the
And so Travis had called me because he needed help navigating all these different political hurdles in the taxi industry. And when I told him my fee, he said, I can't afford it, but just take equity. And I was like, I didn't even know what I was saying yes to, but I'm like, yeah, sure, what the hell. And that was 2011, and then, yeah, so it's a nice culmination today.
8 years later, that must have been a pretty good deal for you.
Yeah, yeah, it worked out pretty well.
Just
how good? 225x, I would say.
Wow.
What was the X?
It's a healthy number. It definitely is enough that I no longer have to worry about paying the rent.
Did you hold on to it the whole time? You never?
I sold about half the SoftBank in the tender a little over a year ago, and then have the rest.
Okay, we're talking about $45 a share. That's the lower end of the price expectations. Values the company overall at about $75 billion. Still, long way from where you got in on this entire thing.
We were at 30 or 50 million when I got in.
Wow. A long way from where you got in. But what does it mean for some of the more recent employees over the last 3 years who have gotten shares at $47 or restricted shares at $47?
I mean, I think, look, and I tell people this all the time who want to go to startups, joining a late-stage startup is not a get-rich-quick scheme, right? I love this company, and I want to be here, and I can learn from it, and it's a good job. But if you want to make a lot of money working in tech, you have to take a giant gamble and go in at the seed or Series A, and really after that, most of the upside's usually gone. So people who have chosen to work at Uber the last few years, they should look at it more like a job and not like, hey, this giant gamble is going to pay off for me really soon.
Hey, Steve, having said that, even though we priced at 45, maybe it was a smart thing for them to bring that down so you could see a pop at the open today, potentially.
Yeah, that always comes into play, where the pricing is right, where you think it is right, because you want to have a good day. Obviously, when you tune in and you watch the opening bell and Bob Pisani will be down there and he'll be behind the post, you want to make sure that it holds price. If it holds price and pops and rallies, that's obviously a successful day. So you want to keep that bounce as much as you can, so that's very important.
You know what, on Delta House at night, when you do that, all you guys do at the end, how much time is left, and you write it down. What's the opening price?
My first blush was going to be $62. That's where I felt.
Really?
And then I felt like I was way high on there. But I would probably say mid-50s.
So you're looking for a pop?
I am looking for a pop. And you never know. These things are all, it's all played by the day and the bankers and everything else, but probably mid-50s.
Do you think that's what's going to happen, really?
Yeah, I mean, I think there's two different worlds here. There's the ecosystem and bubble of the tech world, right? And if you're looking at people in the Valley, venture capitalists, reporters, it's been more pessimistic than not in the last couple of months.
That's what I mean.
Really, since
it's
Lyft.
like
Absolutely.
Lyft took the hit.
For sure. But then the other question, I guess, it is, we all kind of talk to each other and live in this little bubble. When real people all of a sudden can start investing, are they going to say, oh, profitability, driver subsidization, all these things we talk about, or just, hey, I get to invest in Uber, that's awesome.
And a lot of people look at it because they take Ubers and they feel like they have a real connection to it. But, Mike, it's a tough week. This market overall isn't doing them any favors.
No, absolutely. It probably did get a little bit of a discount for that reason, although I do think the ways in which Uber is very different from most IPOs is relevant here, too. Mm-hmm. It's not usual that you have a company that's, first of all, this big, kind of this battle-tested. It's not introducing itself to the world right now, right? People know it. They've been through all these kind of private crises while they were not publicly owned. And I do think that $45, nobody remembers Amazon's IPO price.
No.
It's what happened. You know what you remember? Facebook's IPO price, because they were too aggressive.
Because there was a problem.
Right? So that's the difference. And so I do think when you publicly say a year and a half in advance, we're going to go public in a year and a half, and it's this very slow, methodical process, I do think it's probably a net benefit that, fine, take 45. I don't even think it's about the pop. I think it's about, look, this is roughly the valuation we're comfortable with debuting at, and we would love to have a little upside from there, but I don't think they're trying to engineer a very precise 20% upside.
And think about what happened. Joe just said Lyft took the hit.
Yeah.
Think about what happened.
For the never earn a profit hit.
Right. So people, when they buy these IPOs, you make room on your book or in your portfolio for a certain amount of plays. People wanted, for good or bad, they wanted to own Uber and own Uber longer term, and they wanted a piece of the lift. But when you see that sell pressure, they make room for Uber. So you wind up, it's a double whammy. So you get it, you sell it, and then the guys that held it long enough want to sell it because they have to make room for Uber. They don't want to own both.